This is Omega and you're watching Money Mondays. In today's video, what I want to discuss with you is using indicators when trading indices. What I'll first do is discuss technical analysis and how indicators relates to it. And then what I'll do is break down some of the most popular indicators that you will find as a trader. But before we do all of that, here's a quick message from our video sponsor. This video is sponsored by the all-in-one Vantage trading app. Trade indices like a pro with low spreads and leverage as high as 1,000 to 1. Diversify your trading portfolio with over 1,000 plus tradable instruments, including 25 plus of popular market indices like the Dow Jones 30, NASDAQ 100, and DAX 50. Trade indices like a pro on the Vantage app. Trade smarter at Vantage. Okay, so let's get started. The first thing that we have to understand when discussing indicators is technical analysis. What is technical analysis? This is something that you'll hear about when you are a trader. Simply put, technical analysis is using statistical trends to analyze market activity. Basically, what you're doing as a trader is looking at the price data of the market of a particular asset and how it is moving. And then what you're going to do is apply technical indicators to that price data in order to make decisions and determine entry and exit points for yourself. So there are a lot of popular indicators that you'll find in the market, but most indicators will fall in one of the following four categories. You get what we call trend following indicators. These are indicators that help us identify trends in the market, whether the trend is going sideways, upwards, or going down. Then you also get what we call momentum indicators. These are indicators that help us understand how strong the movement is of a particular price in a particular direction. Sometimes prices move very quickly, sometimes prices move very slowly. So one of the things that you will want to understand when you are trading is how slow or how fast is the price moving relative to the rest of the market and relative to a historical movement as well. The third type of indicator that you'll find in the market is what we call a volatility indicator. Basically, volatility is how far up and down prices are moving away from the average price. And so you want to understand if a particular asset is very volatile, as in if its price is moving up and down a lot. And then the fourth kind of indicator that you will find is an oscillator. Now, an oscillator isn't a specific technique, but rather is a particular type of indicator, and there are different type of oscillators that you will find in the market. So what are the popular indicators that we are going to be discussing? We're going to speak about three indicators. The first one being the moving average, then the second one being the RSI, or better known as the relative strength index, and then the third one is the MACD, which we call the moving average convergence and divergence. So let's first look at the moving average indicator. So what is the moving average indicator? Simply put, the moving average indicator is a trend following indicator. It's a line on a chart where basically a calculation has been done where historical price data has been taken into consideration, and then an average price has been determined by the indicator. And like all indicators, you can set up your moving average to measure a particular length of time back into the past. That way you can actually see what the average price is for a particular asset over a particular length of time. So you might put on the 200-day moving average, which basically tells you what has been the average price for the assets over the last 200 days. You might use a 55-day moving average, which can also tell you what has been the average price over the last 55 days, or a 21-day moving average, or a 7-day moving average. But the type of moving average that you'll use is up to you. Keep in mind that there are different types of moving averages. We get exponential moving average, a weighted moving average, and then we get the SMA, which is the simple moving average. That is the one that you'll come across most when you are trading, which is the one that I'm mainly referring to in this particular video. So the moving average is simply a trend following indicator that will help you plot out what the average price is over a particular period for a particular asset. And one of the key advantages of the moving average is the signals that it can generate. So it can generate both buy signals and selling signals. The common understanding of the moving average, and keep in mind this is not financial advice, but this is just something that is generally understood by traders. The common idea of the moving average is that when the price crosses over the moving average, that is an indication for buy, and then when the price crosses under the moving average, that is an indication that potentially it's time to sell. So you can use the moving average to generate both buy and sell signals, and also see what the trend is for a particular asset. And now, the second indicator that we are looking at is the RSI, which stands for Relative Strength Index. This is an indicator that is, first of all, an oscillator, but is actually also a momentum indicator and can sometimes be used to identify trend. Most of the time, the RSI, though, is used to identify what we call overbought and oversold scenarios. So the market is simply an auction, and so you can get an asset actually being overbought, meaning there's been a lot of buying of a particular asset, and now the market is actually going to run out of buyers, which can potentially cause a price reversal. The other thing that you'll find with the RSI is what we call oversold situations, where basically you can find that the asset has actually been sold quite a lot, and now the market is in fact running out of sellers, which causes buyers to bid higher for prices, which causes then a price reversal upwards. The other signals that you can get from the RSI is in fact buying and selling signals when the RSI crosses over the overbought line, which indicates a lot of momentum to the upside, or you can also get down signals, so signals that the price is actually going to go down when the RSI crosses under the oversold line, which indicates that there's a lot of momentum downwards for the particular asset. The most popular, though, type of signal that you can find from the RSI is a divergence. So what we mean by divergence is when the signal line is actually moving in an opposite direction to what the price line is moving. So for example, you could find that the price line is moving the price line of the actual asset is moving downwards while the RSI is in fact moving upwards, and that would be what we call a divergence. So the two are actually diverting away from each other, and that would be a signal for a particular type of trade. In this case, with the price line moving upwards while the RSI is moving downwards, that could be an indication that the trend is actually about to slow down, and then there would be a price reversal to the downside of the actual asset. If of course you find that RSI is moving upwards while the price line is moving downwards, that could be an indication that the price is in fact going to reverse upwards. So the RSI is quite a diverse indicator, and you can apply it the way that you see fit for your particular strategy when it comes to trading. So that's the RSI. It's a momentum indicator that is also an oscillator, and the reason we call it an oscillator, it's because it's moving in between two lines. So the signal line is moving between two lines, and that's why we call it an oscillator. It's oscillating between two lines basically. The third indicator that we are looking at is the MACD, or MACD, which basically stands for moving average convergence and divergence. And all the MACD indicator is a momentum indicator that is trend following, meaning it will help you identify the strength of a particular move, basically how quick the price is changing or how slowly the price is changing, and then at the same time it will help you identify the trend of the price, whether that is upwards, sideways, or downwards. So the MACD is an indicator that you can apply to pretty much any asset and then get some insight on the trend or the strength of the move of a particular asset. And so it's also a diverse indicator, just like the other indicators that we've discussed so far. So those are the three popular indicators that you'll find in the market: the moving average, the RSI, which is the relative strength index, and then you also get the MACD indicator. I had also mentioned that there's another type of indicator known as volatility indicators. So one popular volatility indicator that you'll find in the market is the RVI, which is the relative volatility index, which is basically an indicator that is an oscillator, so it's moving in between 2 points, and what it can help you identify is volatility movements within the market. And so those are the type of indicators that you can find and you can apply to your trading. So how do we access our indicators on the Vantage trading app? The way we do that is, first of all, you log into your Vantage trading app. And then once you've logged on, you then slide over to an index that you wish to trade. So for example, we are going to use the NASDAQ 100. Then we click on the NASDAQ 100, and now we have the order screen for the NASDAQ 100. Then what we're going to do is click on the chart and then choose our main indicator. And for me, I've chosen the moving average. And then for the sub indicator, I've chosen the MACD, so MACD. And just like that, I have an indicator now on my chart, and I'm ready to analyze the chart of the NASDAQ 100. And that's how easy and simple it is to add an indicator onto your Vantage trading app charts. Great, and just like that, I've added indicators onto my charts, which will now enable me to actually analyze the NASDAQ 100. Using the MACD, I can actually analyze the momentum and the strength of the movement of the price of the NASDAQ 100. And then using my moving average, I can actually analyze the trend of the NASDAQ 100. And then add to this the news that you can see at the bottom. I can actually also do some fundamental analysis using the Vantage trading app. And couple this with the technical analysis of my indicators, I can actually make some really good trading decisions as well. Just remember that indicators are not actually foolproof. They're just another way that helps us analyze assets when we are trading. That way we can make better informed decisions and understand exactly what is actually going on with the market. Just always remember that when you are a trader, you must picture the market and then understand understand what other people are doing in the market, what sort of decisions they are in fact actually taking. And indicators will actually help you see market decisions that other market participants are actually doing. And that's something that is pretty valuable when you're a trader trying to make decisions on whether to buy or sell something.
No one is born a trader. Be reborn a trader. Trade smarter at Vantage.